Hello there. Thank you for coming and watch my video. Hello everyone, my name is RJ and I am CEO of RJR Prime Bookkeeping and Tax Firm. Today we will go over the remainder of January General Journals in connection with the first video. In this video, we're just going to go over the basics into how to categorize and transaction and making sure every account is correct and balanced. First, I want to do a disclaimer. This is just transactions from either my personal experience with my clients or my experience with my education or my experience personally. If you have a CPA and you have questions, go to your CPA and make sure that they are correct. If you need a bookkeeper, go to www.rjiprime.com and set up a free 30-minute consultation, and we can go over how I can fix your books. And if you have questions, you can easily just email me before the meeting or get in contact with me. All right, thank you. So this video, we are going to go and start on January 15th. That is where we purchase software to build our company's website. So you see there, we categorize it as software expense. And then right here, we show the source document. Now, the source document is very important when we're dealing with bookkeeping and taxes. You want to keep 100% accurate record of your source documents. So just in case you get audited, it's very easy to gather the information that you have for the year that you're being audited. And you can just send it over to whoever's doing the audit on your company. So I can't stress this enough, when the most important thing is keeping your business account separate from your personal account. Yes, it's possible, but it's hard on everyone in the situation when you do it that way. And the IRS requires you to separate personal and business accounts. And trust me when I tell you this, it's just so much easier doing it that way. The different types of source documents before we move on are receipts, invoices, bank statements, credit card statements, purchase orders, loan documents, or credit memos. All of those are qualified as source documents. We will not take writing on a piece of paper. We need proof that the transaction is correct. We need proof that it is real. We won't create a transaction without that. Thank you. So we move on. We bought more advertisement space, and it's an expense. So we will always debit an expense and credit the checking account, unless we get it on credit, and then we will credit the accounts payable account. Then next, we received a few more invoices. So since we received a few more invoices, we will debit accounts receivable, because we want to keep record of the unpaid invoices. And the accounts receivable is easy. It's very easy and very simple to keep track of your money. And then once they pay it, we will just debit checking account, because that's the account we received the money in. And we would debit the accounts receivable accounts, letting us know that we have received that money on that invoice, so we can close out that invoice. So keep an accurate record is very important when we're dealing with your company throughout the years, because sometimes you're just going to forget about it. And when you forget about it, you forget to add it to your books. And if you forget to add something to your books, something will always be unbalanced. And that's why we will go back and fix these books, because we know how to go back. We know what errors to check for. So we did a couple more expenses: gas, meal, insurance, business, and auto. We will just debit all the expenses, and we will credit the checking account. So at the end of the year, at the end of the period, which right now we're doing monthly periods, so we will close out each month, because I feel like small and medium-sized business, especially businesses that are just starting out, should close out every month so they get a better and accurate picture of the profit and loss statement. Because everyone knows in the beginning, it's very hard and it's very important to manage your books so you know exactly what you can invest in so you can grow your company. You never want to get caught not prepared for something in an event. So at the end of each period, we create something called a worksheet. A worksheet is just reports together on one actual spreadsheet. So we have the unadjusted trial balance, then we have adjustments, and then we have the adjusted trial balance. Then after the adjustment trial balance, we have the profit and loss statement, which is also called the income statement. And then after the income statement, we have your balance sheet. And then after your balance sheet, we have the post-closing trial balance. The most important thing when doing this worksheet is making sure everything is correct. And how do you make sure everything is correct? You have something called the general ledgers. Each account that we put in the general journal in the account section has his own ledger account. From the checking account to your supplies, to your equipment, to your expense account, to your revenue, to your equity account, everyone has its own ledger account so we can sort through the information clearly. And then after we do that, we check the totals of the amount. We transfer the amount from the general ledger to the worksheet. After we transfer the amounts to the worksheet, we start to plug in our numbers to make sure we did the bookkeeping for January correctly. After we input the data, we'll come down here to the total balances, and have you notice it's balanced. So we are perfect. We can move on to the adjustments. The adjustments are for any adjustment that you need to make at the end of the year before you move on. So as you can see, we have depreciation. Depreciation, the formula that I use is straightforward depreciation. It's just the cost of the asset minus the salvage value. The salvage value is just the amount you think you can get to when you decide to sell the piece of asset at the end of its lifespan, divided by the lifespan, and that'll give you your annual depreciation. I would rather do monthly depreciation just because, like I mentioned earlier, you get an accurate picture of your profit and loss statement, and it's very important to know how much you're making, especially in the beginning. So when you take that number, that yearly number, you'll divide it by 12, and that amount is what you depreciate that asset at the end of each period. Now, a lot of people do yearly, and we can do yearly if you want. It's easier, but like I said, if you break it down month by month, you get a better look at your company, especially if it's a brand new company. You might want to just do month to month, at least for the first 3 years. And that is my personal opinion. That is not facts. You can do what you want. I'm not telling you what to do. I'm just giving you my opinion on this topic. After we do our adjustments, we come down and make sure we create the depreciation expense account and the supplies account, because up here we use $1,000 worth of supplies during this month, so we'll come down here and expense it. As you notice, it's balanced, and then we move on to the adjusted trial balance, and this is just to make sure the adjustments fit in perfectly with an unadjusted trial balance, which it does. We just transfer over the amounts, and you can see how the accumulated depreciation truck is just a sub account of the actual fixed asset. Then we move over our equity, we bring over the expenses, and everything is perfect. So we move on to the income statement, aka profit and loss statement. This is just your revenues right here and your expenses. You come down, we didn't make that much in revenue. That is all right. We're still getting our company up and running. We'll take this net loss, just add it up, totals. And you see that we have a net loss of negative $5,082.15, which is all right. Like I said, we're just starting out. We are good to go. And we move over to the balance sheet to make sure our balance sheet is balanced. As you can tell, everything is balanced. We're good. It's just we're taking away from the net loss from the equity account between the partners, which you can see in the post-closing trial balance. That is the only thing different with the post post-closing trial balance. And it's the only thing different. But at the end of the day, everything is balanced out. Right here. My balance sheet is balanced, and my post-closing trial balance is balanced out. So thank you. Those are just the basic steps of closing out a period. For this case, it's a month period. Like I said, with small and medium-sized business, I prefer to close them out just because you get a better look at your profit and loss statement. You want to make sure that expenses are categorized correctly, assets are categorized correctly, your source documents are 100% legit and credible. Just act ethical when you're doing your books. It's very important, and everything is traceable. You might as well just do it correct the first time, and you won't have any hassle. Like I said again, if you're looking for a bookkeeper, www.rjrprime.com. Set up a free 30-minute consultation. We can go over your books. We can go over how you have your book set up so far. If you need your book set up if you need your book set up from the beginning, I can do that for you. Just let me know what you need. Thank you again for coming and watching my video. You have an amazing day. Bye-bye.